Hey gang, my name's Bill Lyons and I'm co-founder and CEO of Revestor. And today I wanted to share with you guys that are new to real estate investing about what to look for out there. Most people that flip properties are very experienced. There can be danger in flipping properties, a lot of things that can be uncovered, a lot of unknowns, and you can really lose your butt. So most people start in real estate investing by buying and holding property and renting it out long-term or even short-term on Airbnb. So if you go to any property on Revestor, the first thing you want to do is kind of look at some of the key indicators to see if a property makes sense, if it's worth investing in or not, on a long-term buy and hold strategy. So if you go to the detail page, one of the first indicators that you're going to see there is cap rate. And cap rate is simply, capitalization rate, is simply the net operating income into the purchase price. So what does that mean? It just gives you a gauge as if the property's good or not based on the price I'm paying and the expenses associated with the property. So am I buying it for a good price? And after all the expenses, does it have a good cap rate? So my HOA, my taxes, my insurance, we use a little acronym called TIMR, taxes, insurance, management, maintenance, utilities, repairs. You can even add vacancy rate in there. But bottom line is it a good investment for what you pay for it and the expenses associated with it? Most people want to see roughly about a 6% plus cap rate to see if the property makes sense. And so on Revestor, you can slide down to pay less for the property, or maybe you're getting outbid, you can slide it up. You can override the expenses and enter in some expenses that may or may not be there that we didn't pull in. So that's the first thing. Look at your cap rate when you're investing in property long term. Then the second part is your cash flow. What does cash flow mean? At the end of the day, what are you making after all of these expenses and after the mortgage payment? So really cash flow is the key indicator for can you finance it? Does it make sense after the financing? And how much can I leverage the financing to make it make sense? So I like to see a minimum of $200 a month in cash flow in a property. I know some people will buy properties at break even or a little bit of a loss because rental income is so aggressive right now. We really are in a landlord's market. And people are paying a lot for rent and rent continues to go up. But I like to, invest at zero break even or $200 a month. And so what does that mean? I look at it and say, well, if I put 20% down, what is that going to do at this interest rate with this payment? Am I still going to be able to get that $200 a month? Or, hey, maybe I need to put 30% down or 40%. And when does it not make sense? Well, that's the other indicator right in this section, which is your cash on cash return. So then I might be putting too much cash down and I'm not making enough money on that down payment. And so then I'm not leveraging enough. So these are some key things that you can look at when you're investing in real estate. And then at the bottom part, the final part you want to look at is what is this going to look like? What are the what ifs? What are the predictions of the future? What if it appreciates 0%? What if it appreciates 4%? And how long am I going to hold this property for? I think that in any business or in stocks or in real estate, you got to have an exit strategy. You got to know when you're going to sell that Apple stock, or you're going to know when you're going to get out of the property. So you look at your return on investment if I hold it for 5 years or 10 years or 20 years. What's going to be my exit and what's that going to look like? What are the closing costs going to look like? What are the carrying costs going to look like? And at the end of the day, what's my net profit after that 5 years or 10 years of holding or 30 years? And then all of a sudden, you can continue to do this over and over and over again and build up a portfolio of cash flow properties in addition to your stocks and in addition to all the other things that you're investing in. So if you're new to real estate, there's other videos that we have that go into detail about this detail page, talking about net operating income, talking about cap rate, talking about cash flow, talking about cash on cash return, which again, by the way, cash on cash return is the money you're making on your down payment. and you look at that and say, well, making 10% on my down payment, that's better than having that money in the bank. So you're able to use that cash, and the rest you're financing or leveraging the purchase of that home. Then we look at return on investment, we look at net profit, we look at all these cool things. So use the investment calculator on every single deal, whether it's on Revestor, the MLS, or an off-market property. Use the calculator to your advantage, and you're really gonna set yourself up for success, because you gotta know the math, guys. Talk to you soon, and we'll have more videos for you.